Hello, it's Mr. Investing's lecturers back. Here are some of those financial tips which can transform your financial well-being and doesn't require you to be a Wall Street hustle. The financial habits I'm about to reveal might seem simple at first glance, but they're precisely what most successful people use to build genuine wealth, and that's exactly why we made this video, to let you know of step-by-step on how to improve on your financial well-being. By the end of this video, you'll understand exactly which habits to implement immediately, and how to maintain them even when life gets challenging. So if you're new to our channel, make sure to subscribe and hit the bell icon so you never miss our new financial wisdom and practical advice. Well, before we dive into the specific habits that will transform your financial life, there's an important concept you need to understand first, which is the compound effect of financial habits. This isn't just about making a few good decisions. It's about understanding that small, consistent actions create massive results over time. And that's why we're starting here, because it matters that much. When you get to know how the compound effect works with your habits, you'll never approach your finances the same way again. What does this mean in practical terms? Let's say you have two people. Person 1 saves $10 per day, while person 2 doesn't save anything. After 1 month, the difference is only $300, hardly life-changing. But fast forward 5 years, and person 1 saves $10 per day, and person 2 has saved over $18,000, not including any interest or investment returns. This isn't just about the money itself. It's about the mindset and discipline developed through consistent action. Here's the thing about habits. They operate below your conscious awareness once established. When saving money becomes as automatic as brushing your teeth, you've removed the psychological barrier of decision fatigue. Financial freedom is available to those who learn about it and work for it, says Robert Kiyosaki. The key word here is work. Consistent, habitual work. And don't feel like this only applies to those with high incomes. The power of financial habits is actually more transformative for those with modest earnings. Someone making $50,000 a year with excellent financial habits often builds more wealth than someone earning $100,000 with poor habits. The evidence is everywhere when you start looking. As we explore each habit throughout, always remember that the compound effect is working either for or against you. There's no neutral ground with financial habits. Your most powerful ally when it comes to creating wealth isn't a hot stock tip or a lottery ticket. It's your daily habits working silently in the background, compounding over time. Now that we've established the foundation of the compound effect, let's dive into the first powerful habit. Habit number 1, zero-based budgeting with weekly reviews. This habit can seem intimidating at first, especially if you've never created a budget before. But no worries, we'll help you break it down so it becomes second nature. Traditional budgeting often fails because it's too rigid and doesn't account for real-life variables. Zero-based budgeting changes everything. First, let's understand what zero-based budgeting actually means. Unlike conventional budgeting, where you simply allocate percentages of your income to broad categories, zero-based budgeting assigns every single dollar a specific job. Give every dollar a name, as financial expert Dave Ramsey puts it. But this method goes beyond that. It ensures your income minus your expenses equals exactly zero, meaning every dollar is working for you. To implement this habit effectively, start by tracking every expense for 2 weeks. Don't judge your spending yet. Just observe. This creates awareness, which is the first step to any behavioral change. Once you have this data, create categories that reflect your actual life, not some ideal version. The practical application looks like this. If you earn $5,000 monthly, you should precisely allocate all $5,000 across savings, investments, bills, groceries, entertainment, and other categories. The weekly review is where the magic happens. Every Sunday evening, friends, it's more than 20 minutes comparing your actual spending to your plan. Did unexpected expenses arise? Did you overspend in certain categories? This isn't about perfection. It's about adjustment and awareness. For example, Rose, a nurse, started this habit and discovered she was spending over $300 monthly on subscription services she barely used. Within 3 months of implementing weekly reviews, she redirected that money toward paying off her credit card debt. One of the techniques that makes this habit stick is using a digital tool like the one I call YNAB, or You Need a Budget, which can sync with your accounts and send notifications when you're approaching category limits. The visual feedback creates a powerful psychological effect that paper budgeting can't match. The beauty of this habit is that it works regardless of income level. Whether you're making $40,000 or $400,000 annually, knowing exactly where your money goes is the foundation of financial well-being. As your income grows, your categories might change, but the principle remains the same. Every dollar needs a purpose. Okay, we've covered the compound effect of financial habits, and we've discussed zero-based budgeting with weekly reviews. Now let's move on to the second powerful habit. The 24-hour purchase rule. Consider this your first real step to breaking emotional spending cycles. This rule is a powerful habit that can be used to break emotional spending. The 24-hour purchase rule is where your impulse control gets its first serious workout. It's time to discuss how this simple waiting period can drastically reduce unnecessary spending and help you make purchases that actually align with your values and goals. The first thing you'll need to understand is how retailers manipulate your psychology. From limited-time offers to strategically placed items at checkout, stores have mastered the art of triggering impulsive buying. It's simple to understand why. When you make emotional purchases, you bypass the rational part of your brain that would otherwise question the value. You'll have to enter a different mindset about what constitutes a good deal, and once it's established, you're ready to implement the rule. The beauty of this approach is that it works with your psychology rather than against it. It allows emotions to settle without creating deprivation. But how exactly does the 24-hour rule work? For any non-essential purchase over a certain amount, you need to be able to buy